What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. So I have two monthly dividend stocks for you guys to look into, and one of them I own and I really like it. It has increased its dividend over time. It's a very specific real estate investment trust, but I also have this monthly dividend stock that is very unique, has a little bit of a high expense ratio, but you're going to get a good bang for your buck consistently. And it's not really in the real estate sector either. It's not really a covered call ETF. It's one that I'm thinking about putting in my M1 Finance dividend portfolio for dividend income and for passive income, obviously. But I do need this stock or other stocks to pay monthly dividends so that I can buy my quarterly dividend stocks, because today I just had Iron Mountain. I got about $37. So guess what happened in M1 Finance? So I got $37. It went to reinvest automatically, and then bought like half a share of QYLD, a little bit of XYLD, and UVV. So you're seeing my quarterly dividends starting to buy my monthly dividends, but I also want to have my monthly dividends buy my quarterly dividends. So I kind of want a symbiotic relationship there where these both, pay off each other. And then I can flip that eventually, 10, 15 years, start, making the passive income. Probably not. I really will just reinvest and just go from there. I think what I'll plan on doing is, working as a nurse or nurse practitioner, just continue to make money, build up my dividend portfolio, maybe have a traditional Roth IRA on the side. And I'm actually interested in looking at investing in crypto. So I really do think cryptocurrency is interesting. There are some like blockchain and some things where you can get interest off of money that you put in. So I really do want to expand my portfolio. I have some real estate with Fundrise, looked at a little bit of Bitcoin and Ethereum, but I really want to, I have a traditional IRA on Fidelity, but I really want to expand my portfolio. I want to sit on my butt and make nothing, do nothing and make money. We all do. I mean, that's one of my goal is for my dividend portfolio is to treat it as a retirement pension. And I always say, if you guys, we all have a goal. I want to make $1,000 to $3,000 a month of my monthly dividends and about $2,000 to $4,000 a month of my quarterly dividends. And honestly, I mean, that's rational. It's probably more obtainable with the quarterly dividends than the monthly dividends. But if I continue to reinvest and see what happens, hopefully I'll get to that point where I make about $100 a month with like and other stocks and stuff. So I really can start saying that I reach my goal of 1,000. But since I'm young, I'm 35. Once I hit 55, that's probably when I'm going to start changing things and be like, well, I'm going to flip it now, buddy. But right now, I got about 20 years to one. I want to get a $100,000 dividend portfolio, my M1 Finance portfolio. But I also, want to get it bigger and bigger, which I probably will do. I mean, $100,000 of the dividend portfolios, I mean, it's big, but if I want to get a limit, okay, I want to reach my goal, maybe I'll try to get to 4,000, for quarterly dividends. But I just want to keep on. I want to get the machine going, so it gets to the point where I don't have to put money in here. Okay, M1 Finance, I'm making so much money on dividends. I really don't have to put money in to reach and just let the thing reinvest and fix itself. That will probably happen if I get to maybe 200,000. I can just leave it alone and just put money in, let it reinvest. But right now, I need to be smart with my money. I need these monthly dividends to kick in. And these are two of them I have in my M1 Finance portfolio. So again, if you are new to this channel, everything's free. All I ask you to do, I don't have a Patreon account. All these videos you watch are free for you guys, okay? This is why I do this for you guys. So, again, smash that like button, hit that notification bell once you subscribe and enjoy this channel. So we're going to check these out right now. So that first stock I would like to discuss is LTC Properties. So this is basically long-term care facilities that distribute a monthly dividend. And look at how these guys have done. They're usually in the 40s. They're kind of stagnant, but they have increased their dividend over time. Obviously, the S&P has destroyed LTC Properties since inception, but these monthly dividends from these guys are very attractive. And I'm going to go to their website in a second and discuss why I invest in LTC Properties. But I want you guys to think about this. Now, I work in healthcare. I'm kind of a research, a nerd that looks into research and stuff. They're saying, okay, by 2050, okay, some articles, 1 in 3 is going to have type 2 diabetes and 1 in 3 is going to be obese. What does that mean for LTC Properties? Okay, let's think about this. Type 2 diabetes, people get amputations in their feet. Above the knee amputations, people are not very compliant with their diabetes. They call it a hemoglobin A1C. That's like a test that you do every 90 days. People have high A1Cs, and there's a correlation with hemoglobin A1Cs and getting sick. So if you have a high hemoglobin A1C, your chances of, if you get sick, you're going to be a lot worse. So if you look in what's going on with this COVID and this pandemic, a lot of people that had diabetes were getting whacked pretty quick because of that. And people really don't want to, it's weird because you go in the gym or you're, at a fitness facility or something, see everybody healthy, or at least people trying to change themselves. And people have done significant changes. I mean, there's one guy that worked out in my gym. I kind of knew him for about 1.5 years, and we've been discussing a lot, chatting a little bit more for like sets or something. This guy dropped like 230 pounds. I mean, that guy mentally, okay, you guys, us as investors mentally, a lot of you guys that I collaborate with or chat with on the channel and stuff, you guys are well motivated. You guys have that mentality that nothing's going to stop you, okay? Nothing's going to stop that guy from losing weight, but the mentality, it's complacent mentality in this country is terrible. And that's why, people are getting sicker, people are more overweight. There's just attitude towards mediocrity and, not taking care of yourself and self-care. I mean, those values have gone. I mean, health and wellness is. So these guys, LTC Properties, is I'm going to jump to their website real quick. So the big thing is, okay, these guys are well diversified. They're assisted living and skilled nursing facilities. So what happens with a lot of these people with diabetes that are obese? When you get an amputation and you can barely walk, where do you go? A skilled nursing facility. So right here, I'm in Ohio. I mean, how many we got? We got 7 assisted living and 2 skilled nursing facilities. Now, nobody wants to be in skilled nursing or assisted living, but if you're not taking care of yourself, and they're saying that the baby boomers, I mean, things are happening with the baby boomers, they're going to have to be at skilled rehab or assisted living. Another thing is, like, let's think about the winter. It doesn't matter if you're healthy. You fall, get a hip fracture, you're going to be in skilled rehab potentially, I mean, you got to get some good workouts. So they're paying, you're paying a decent amount of money for your rehab and your insurances for skilled rehab. And these guys are getting money, these rehab facilities, and then they're paying it to LTC. So appreciation comes up and these guys rack up stuff. So it doesn't matter if you're healthy or not. People are going to get hurt. They're going to get, my first job as a nurse, I worked at a skilled rehab facility, and some people actually were there just for a few days just to getting antibiotics and have a PICC line and in their arm and get labs drawn to make sure that they were okay or get antibiotics. So people are getting older, they're going to skilled rehab facilities, amputations are a lot higher, diabetes, I mean, podiatry is busy with people with foot ulcers and stuff. And there's a lot of people who should be in skilled rehab. facilities, but they don't want to. And then finally they realize, you know what? I can't take care of myself at home. I have to be in an assisted living facility. It kind of sucks. I mean, nobody wants to be there, but the people who are very non-compliant, that's what's going on. It's kind of a shame. So, and then the thing is with assisted living and skilled nursing, you got people with real bad pressure sores sometimes that are in the hospital, and they have to go to assisted living because they can't take care of themselves. They need nutrition and all this, and it takes time to heal pressure sores. So things are going on that are going to promote assisted living and skilled rehab facilities, and the comorbidities with people in the United States and the surgeries like I was just discussing, that's going to benefit LTC properties. So, I don't want anybody sick or anything, but these guys, you don't want to wish an amputation or anything on anyone. That's just wrong. But, this is why these guys are in business. So, the future is bright in healthcare because people are not taking care of themselves. It's really a shame. It is, but that's the direction that we're headed. And these guys have a really good portfolio to, they're going to start buying more properties probably, and they're just going to get bigger and bigger. So I'm just letting you know this is what these guys are about, and this is their business model, and they distribute monthly dividends. So I'm going to show you their dividend history real quick. So slowly they're like at 18 cents. They distribute 18 cents. Now they're at 19 cents. Eventually they'll probably get to 20, a very good dividend yield of 5.27%, PE ratio right now of 18.07. So people have to pay rent, even when this pandemic hit, okay? Now I did a video on EPR Properties. They're specialized in entertainment properties. LTC is long-term care facilities. So guess who got the first, wave of vaccines? People like LTC Properties. They're going to inject those people into long-term care, get the vulnerable population ready to roll and safe, and then go from there. So that's what I'm telling you guys is these guys are kind of like they're recession proof or pandemic proof because people are going to need to be at a facility anyways. I mean, we would COVID swab. I think since this pandemic, I have COVID swabbed, probably over 400 people, whether I picked up on the COVID units or just discharging people to, long-term care facilities or assisted living facilities or skilled rehab. We have to swab those people anyways before they go there. So we would do that, make sure they were good, send them there. So those guys check to make sure that people had, were COVID free and stuff. Sometimes we'd get some surprises. You do a swab and then you see that, you get that alert, and you're like, oh shit, it's my guy, he's sick, or my lady, she's got it, and then luckily you're wearing a mask, but then you start saying to yourself, oh man, do I have it? Then you're worried and then you got to hide for a week or so in my apartment complex and I post videos. So I'm done rambling, but I'm just saying that there's a lot of security with LTC properties, very good monthly dividend, very good stock to expand in your real estate portfolio. So this next one is not a rate, it's not a covered call ETF. This is really interesting. I had it, I sold it, had it, sold it, but now I'm probably going to officially own this stock. Again, I like the cash flow, and it's actually the cash amount, the distributions is the same as LTC right now, and it's cheaper. So that's even better. And it's pretty stagnant compared to QYLD, because sometimes QYLD will be, up and down a little bit. Sometimes you get 18, sometimes you get 23 or 21 and stuff. But this one's right at 19 cents, just about. And I'm going to explain to you why I like this income fund. So let's check this one out. Now this one is Brookfield Real Assets Income Fund. RA is a symbol. It is 11.28% ratio. Now when you look at it, you're like, ooh, red flags, high dividend yield, but you have to understand what it's about. Is there a risk? Sure, a little bit, but I really need to have you guys understand why I'm really looking at this stock. I'm telling you, I'm not even going to compare it against the S&P. I looked at it. It's not what you really like, for a S&P stock. It's an income fund. It's kind of like the same price just about, but I just like it a lot. And I'm going to show you its portfolio and what it's about, because you really want to know what's in it first before you make a decision on buying it. So first of all, looking into this has a lot of bond holdings. Now, I'm not normally a bond person. It has stock holdings and bond holdings. So it's 2-star rated by Morningstar. Now, if you're an ETF and you want to see increasing dividends over time, this is not a good stock for you to buy, because these bonds, I just want to show you some of the stocks in the portfolio that they have. Okay, NextEra Energy, Occidental Petroleum, Alternative Loan Trust. So these are some special bonds and stuff in certain sectors that they go after. Duke Energy is one of them, great stock. Enbridge, that's one that I have. So they have, here's some of their top 25 holdings, okay? So I'm on Morningstar right now, just going over a few things. So here's some of their stocks, the energy stocks: American Tower Corp, Nomura, okay, Hilton USA Trust, NextEra Energy. So here's the bond view. So, a lot of these with these bonds, there's a little bit of a risk with this one, but if you look at the returns that it has, okay, it's not going to like go crazy or anything. All right, it's going to be pretty consistent. It's going to be, right. It's going to be right where high yield bonds are. Okay, it's not going to increase its net asset value. You got to be careful. There's one thing that I want to show you real quick is the expense ratio right here. So the fees and expenses, you got to be careful with. It's high, but an expense ratio of 2.24%. So I'm just showing you right here. I mean, I do have Brookfield, I have some stocks in Brookfield, but you got to be careful with these, because I had to sip my coffee, but I'm taking an espresso shot. But the thing is, watch the fees, understand why you're doing fees, okay? It's a very good, I'm telling you, the assets income fund, which I'm going to show you the dividend history, okay? This is what I like about it. Now, we have to make sure that it's sustainable. It looks like it's sustainable with its dividend, so that's a good thing. The economy is starting to get better. Things are starting to open up, so those are taken into consideration as well. So I want you to look at that as well. So let's look at its dividend history. So right here, you're getting a good bang for your buck at pretty much 19 to 20 cents. 11% yield, nice high yield. Okay, look at the expense ratio. It's not going to increase over time. So forget it if you think that it's going to increase. It's doubtful. I think it's really well managed. And honestly, I know there's a high expense ratio and it's 2-star Morningstar rated, but the definition, it makes sense. It's pertinent. It tells you pretty much that the people are straightforward, that it's an income fund. So it's kind of diversified. I'm not a bond person, but think about, you keep on reinvesting it over time and how much money you make, and then you get to $100 a month with that. You just flip it, or just buy dividend stocks for that, or have it pay for utilities. That's what I like about Brookfield Real Assets Income Fund. It's not going to increase its dividend. It's way cheaper. It's actually distributing the same amount with LTC. But why not have both? And that's what I'm considering doing. My M1 Finance portfolios. I'm going to have a new little fractional shares section. Just have it on monthly dividend stocks, and maybe put 5 to 10,000 in. Because I was thinking about just once I'm done with the real estate sector, I have X amount of dollars, put it in, start in the energy sector, but why not do the monthly dividend sector? That way I can start buying more shares in certain sectors like consumer staples or something. So this is one stock that I'm highly considering in my monthly dividend little pie chart, because it's going to be so powerful. It's going to start distributing nice money, a decent amount. So that way I can start buying those quarterly dividend stocks, and quarterly dividend stocks will start buying these stocks. And then this will help buy LTC, and LTC will increase its dividend. So it's huge. It's just building up my Death Star dividend portfolio. So that's kind of where I'm going. So, but I'll show you how many shares I own on LTC and my M1 Finance dividend portfolio. So right here, as I was saying with Iron Mountain, look what I got here. Okay, I got 18 plus 1897, and look what I bought: XYLD, QYLD, and UVB. So where I was going was with these monthly dividends, buying everything. So I made a total of $549.60 in dividends. So my special area with monthly rates / ETFs is LTC Properties, which I own a total of 47.2 shares. Gonna keep on buying more, okay? Keep on buying more, and I'm gonna let that compound interest kick in so that I can buy more shares and everything else. So now you're seeing the importance of these two monthly dividend stocks. I want to know really in the comment section, because I'll meet you guys in the comment section after this, what do you guys think of LTC and Brookfield Real Assets Income Fund? So I like the monthly dividends on them, okay? You're going to get a good bang for your buck in both of them. What do you think about these two monthly dividend stocks to help you earn passive income and make passive income? So let me know. Put it in the comment section. And if you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. $17,000 with the Death Star, just getting bigger. Getting the Death Star bigger, it's growing. You add LTC, man, it's just getting bigger and bigger and bigger. So that's what I have to say to you guys. Look at that. Look at the potential. Look at how powerful the Death Star is getting from these monthly dividend stocks. So you guys take care and have a good one. Oh, and by the way, I'm gonna try to post a video maybe Thursday. Don't quote me on that, but just, if you catch my channel, just watch an extra video or so. That's your homework for you guys. But I'm going to definitely post one Saturday, and I'll try to post one on Sunday. But I'll probably just show you what I'll plan on doing with my dividend income. I did say I was going to post one with Fundrise. I'll probably do one tomorrow on Fundrise. Maybe do about a 20-minute lecture. I found some things that were very interesting with Fundrise, with the changes to the portfolio. But Saturday for sure, I'm going to do a stock and dividend analysis for you guys. But look at how much this has improved and gotten bigger because of the beauty of compound interest. I just had Iron Mountain buy me more shares. So these shares are starting to buy more shares, which is getting this bigger, which is more exciting. So let me know what you guys think, and you guys take care.